In this video, traders, we're going to look at when we should hold our trade overnight for a second day move. Stay tuned. Hey traders, warm welcome to you. All right, so particular thanks to the person who sent this question in, and this question came from, just trying to get your name here, Rob Johle. He says, hi Mark, I've noticed a lot of market movement in the past month have occurred over in the overnight futures sessions. Yeah, good observation, Rob, definitely has. Are there any good rules on when to buy and hold at end of day for an overnight move? I'm following the US markets, S&P 500, etc. Great question, Rob, and appreciate all your questions, guys, support, likes, shares, etc. But thank you, Rob, for sending that in. Okay, so this is a really good question because it's, as a day trader or as a trader who kind of wants to kind of stretch things maybe overnight, you kind of want to make as much money as you can from the trade. And sometimes it feels like, you're closing a trade at the end of the day, you're giving so much back. And a great observation by Rob, definitely in the current environment, lots of movement is happening overnight, and very often that's a bigger move of the day because Asia's kind of driving stuff or Europe's driving stuff. If you're trading the US session and someone's come into the cash session and things have gapped, you're like, there's a lot of opportunity there. Now, there's something to be said that's great even if you're trading the regular trading hour session, because you can frame your trade using the overnight highs, using the overnight lows, etc. However, when is it right to hold your trade at the end of the day? Now, I think Rob actually was saying, when should I initiate a trade? But same thing, right? Whether you're going to trade already and looking to hold it, whether you want to initiate it. So when, generally speaking, is it a good time to do this? Now, bearing in mind, guys, I don't have any raw stats on this. This is just from my eyeball observations and when I sometimes would hold a trade overnight. So there's no stats on this. I'm sure someone's gone off and done all this research before, but generally speaking, this is how I feel about the market. So again, take it with a pinch of salt. So there's a couple of things that are generally good for second day follow through. And what I mean second day follow through is that very often if you've got a strong move on day one, day two, you will get some follow through, but very often it will fade quite quickly. Now, very strong moves, obviously you're going to get day two follow through, day three, but very often you'll get a day two follow through that might gap up, might spike high, double top, and then start to fade. So you've got to be quite nimble with it very often. But the theory is, well, if I've got this situation, then I will hold it overnight. Now, even better, if you're in a trade, you've got a cushion because it allows you to kind of sit through a little bit of a movement down overnight. And you've got to watch out because sometimes overnight, if you've got a stop in, they'll head fake the market down. So they'll close at highs, then they'll kind of really incurse into the prior trend and then kind of push back up and end up gapping up. So you've got to watch out for that if you've got a trailing stop or some sort of stop loss. But anyway, let's get to some of the chart patterns that I like to see to hold for a further move. So generally speaking, broadly speaking, if you've had a trend type day, and I'm going to look at some differences in a second, but a trend type day, i.e. you've opened at lows, closed at highs, opened at highs, closed at lows, or within 10 to 20% of the high or 10 to 20% low, not always going to be the high tick, but if it's kind of come back and closed there, that's all right. If it's come back and closed here, no deal. If it's done that, then generally speaking, and again, no stats to back this up, just eyeball, the next day you'll get an opportunity to retest the high at least. So it might not be a massive amount of juice in it, but very often you're going to retest it. So overnight it might mess around and then it might just gap up in the morning and retest the high. Or you could have that kind of free call option if you like, of it actually really pushing overnight, continuing and gapping up, and then you can literally sell it into that opening pulse to the high side. So that's something to look at, and that's something that's worth doing. Obviously you manage to risk and be careful and cautious and all that other good stuff. Another one, so that's a normal kind of, I'll put number one on that one. Number two is the kind of intraday reversal, something that's happened intraday that's changed the sentiment. These are good because these, I think, are slightly better than these, because very often these will show up, as you can imagine, when you look on a daily chart, you're going to be a nice wick to the downside, right? If you've opened up here and closed here, you can have that wick to the downside, intraday reversal, something has happened, changing sentiment, supply, demand, maybe some kind of fundamental catalyst, kicked in, rallied it to the upside. That looks good, especially if you're in a good position on a daily chart as well. That's something I should let's just address that now. It's got to look good on a daily chart. So even though you've got this, but if you're within a range, then the odds of it following through are much less. Whereas if you've kind of broken out from fresh territory, you've kind of gapped up from a really high, decent resistance level, and then you've pushed through and closed at highs, way more powerful. So going back to this, it's intraday reversal, super powerful, super nice. Again, same kind of rules. If you're closing with the upper 10%, you're good. You're looking for the next day follow through. And this often precurses a multi-day move. All right, so what about something like this? Well, something like this, even though it's closed at highs, I'm not interested because it's done such two-way trade. It's kind of gone to highs, gone to lows, gone to highs, gone to lows. VWAPs probably look something like that. And even though it's closed at highs, it's not clear cut. The whole day has not been that good. Now, one caveat could be if you've been in it and you've got a bit of a cushion, and perhaps, if that was positioned there, say, so we're on day 2, maybe after a day 1 drive above a key level, then maybe. But generally speaking, if you're keeping it simple, I wouldn't be so keen on that. That one, obviously not interested at all. That's just a range bound trade. We've tested highs, tested lows, and we've closed somewhere in the middle. I wouldn't even be slightly interested in that one. And this one, again, super interesting because even though it's like this, you've had some kind of news catalyst that's come in and changed it. And the fact that the bell's gone is the only reason perhaps why this hasn't continued higher. So very likely for some sort of continuation through overnight and into day 2. But those are just some examples, guys. Like I said, make sure you're keeping the risk managed and being cautious and careful. Obviously watching for overnight news, making sure there's nothing coming out in Europe, especially if you're based in the States and maybe just getting up in the morning and you don't want to see kind of Europe has completely put a spanner in the works. So, be mindful of that. But otherwise, these are some things that I quite like. All right, guys, take care and I appreciate the question, Rob. Thank you. Bye-bye.